Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Are we going to get a bullish read or a bearish read on the current stock market trend? Well, let's find out as we consult with our panelists this week: Jared Levy, Senior Stock Strategist at Zacks.com, Stock Strategist Todd Bunton, and ETF Research Director Nina Mishra. The consensus here, and I hate to be the downer, the consensus is that nobody seems to think that this current market rally is going to continue. How come you don't?
I think there's a couple things in play here. You know, obviously I've been a cautious bull all through this, a very cautious bull, and at times more bearish than others. You know, coming into the end of the year, the fiscal cliff was obviously the big sort of unknown. The other issues that I have contention with are GDP growth, which in my opinion is going to be revised even lower.
Yeah.
And the fact that we didn't really solve the fiscal cliff issue. And if you look back to July, August of 2011, the S&P saw a 17% drop in the course of a month last time we went through this. And don't forget, they didn't solve it back then. They just kicked the can down the road. Mm-hmm. I don't think they can do that this time. There needs to be a solution. And you're already seeing posturing on the side of Republicans that there's going to be no more tax cuts, and on the side of Dems, you could feel the tension.
You've got a debt ceiling issue.
You got a debt ceiling issue, and I don't see, again, I'm not good with math, but I don't see them being able to work out a deal where we balance our budget and don't affect either taxes or make massive cuts that influence the economy and drop GDP by another at least minimum 0.5 to 0.7%.
Okay, Todd, you're actually looking for fourth quarter earnings season to be a caution flag for the market.
Absolutely, and this recent rally we've had because of the fiscal cliff resolution hasn't made a whole lot of sense to me. Yes, clarity over tax rates is a good thing, but it's no reason to be bullish on stocks. Let's not forget, where were we before the whole fiscal cliff debate? Mm-hmm. It was the election, but right before that was Q3 earnings season, and that was the worst earnings season since the Great Recession. Earnings growth was negative. Margins apparently have peaked. Revenue growth is hard to come by. And if you look, the 2013 earnings estimates are still pretty rosy out there. Fourth quarter earnings actually kick off tomorrow, Tuesday, with Alcoa.
Right.
We really don't get into the swing of things until next week. But management's going to give their outlook for 2013. I think they're going to be pretty tepid.
Now, to Todd's point, there's a couple things there. First of all, I think he brings up some valid points that, there are still some rosy outlooks. I also believe, though, some market participants are expecting to hear a little bit of that negativity.
They are, but apparently investors haven't, because we're near multi-year highs on the S&P.
Which is driving me nuts.
So people who say, low expectation, everybody's expecting a bad earnings season. Well, it doesn't appear that way. Who is? The market's not. The market's going higher.
I wonder if it's short covering what's been going on now.
Nina's going to be paying particular attention to management guidance during this earnings season.
I think the fourth quarter estimates have already come down substantially. They were very high in the beginning of October. So people will be paying more attention on the management guidance for 2013.
Right.
And also fourth quarter estimates, earnings results are going to be affected by fiscal cliff and Sandy also. So it's kind of skewed. So I'll also be focusing more attention on 2030 guidance, and that is going to affect the market.
And that's the problem.
And that's too rosy.
The problem is the fact that, you bring up such a great point, that Sandy and the fiscal cliff, it's like we're living almost in a fantasy world. I'm going to say a lot of market participants are living in a fantasy world, because we're still blaming it on fiscal cliff, blaming it on Sandy, and I'm wondering if it's like a weird dichotomy, right? They're going to use those as scapegoats, sure. And people maybe say, oh, we're going to get past that, and then it gets bumped to, Q1 growth. Great point on the 2013 guidance. They were looking for 13% growth?
Yeah, which is just too optimistic.
And if you look at, like I said, last quarter earnings growth was negative. This quarter expect to be completely flat. Where's the earnings growth coming from?
Yeah.
Where are these projections coming from?
Well, one of the key drivers of growth, I'm reading, as far as the street is concerned, is going to be the banks. How do you feel about that?
Financials, I am a little more bullish on financials, even with a pretty flat yield curve. At least Bernanke and company is trying to bend the long end of that yield curve. But I think if you're selective, there's a lot of small cap banks right now paying solid dividend yields with increasing earnings momentum. They could be pretty attractive there.
On the flip side, you're concerned about retail.
I am concerned about retail. Namely the discretionaries, right? I mean, consumer discretionary, I think, is going to suffer much harder than people think. I also think companies like Amazon, who, believe it or not, got a huge upgrade by Morgan Stanley. I think they called that wrong. I think they called that wrong because Amazon is working on margins like this. In an industry where margins, they've got a lot of room to play, Amazon is paper thin, and I think they're going to be highly susceptible because of their volume to the weak earnings season, to the weak holiday season.
I agree with you on consumer discretionary as well. 77% of households are going to see higher taxes this year, and that's because of the payroll tax holiday.
Right.
So that was a 2% tailwind people were getting the last couple of years. They're not going to have that anymore. And when
and Medicare taxes too.
Well, of course, yeah. But if you talk about
something substantial, a little more substantial.
Yeah,
I want to circle back to Jared's point, though, about retail. Nina, in paying attention to the management guidance, we
Yes.
started to see some slippage in retail sales
Yes.
at holiday time. Are you anticipating some negative guidance in that sector?
Yes, I mean the holiday sales started on a very strong note, but because of all the fiscal cliff concerns, they ended on rather poor note. And I agree with Todd because of this payroll tax increase. We may see the holiday stocks getting hurt, and we may see that in management guidance also.
One last thing.
Yes.
The big spike we saw in the VIX towards the end of the year, I talked to a lot of my buddies who still trade, some of the biggest options traders on the street.
Yep.
And their thesis, based upon the activity they were seeing, was a lot of shorts buying insurance actually to the upside. They were buying calls and protecting themselves. And what they think, this rally that we just saw, is actually a lot of short covering. A lot of shorts getting blown out, getting hurt, and taking the risk off because they're just, they're suffering. I mean, you're talking millions and millions and millions of dollars lost. And that's what I think contributed just a little bit to this little spike up that we saw.
Okay, that's interesting. Thanks for that. And that kind of brings up to date the latest outlook from these folks anyway on this current rally. We're going to keep an eye on it with other Zacks experts and bring you any changes that may occur. In the meantime, the first top picks list of the year is right in the next segment.